Welcome back to Investing Talk Podcast. Today, we're tackling a question that seems to be on a lot of investors' minds right now. Is AGNC investment a good time to buy? We've gathered a whole heap of information, fundamentals, valuation stuff, technical charts, market sentiment, really trying to give you the full picture. Our goal today is, well, to help you understand what really matters with this company. It's stock, so you can make, informed decisions for yourself. Before we dive in, though, if you find this discussion valuable, maybe hit that subscribe button. Give us a like, leave a comment. Your support really helps us keep bringing these analyses to you. And hey, if you're feeling generous, you could even consider buying us a coffee. Also, seriously, if there's a specific company you'd like us to look into, just drop a comment below after this, and we'll definitely add it to our list.
That's right. We're going to break down all the key insights from our sources on agency investment. What's really interesting here is just how much nuance there is, Even with what feels like it should be a straightforward investment question. Let's unpack this.
Okay, let's start right at the beginning. The absolute basics. What exactly is AGNC investment? I know it's a REIT, but maybe not the kind people usually think of.
Yeah, exactly. AGNC investment is a mortgage REIT, or you'll often hear it called an MREIT. So unlike traditional REITs that, own apartment buildings or shopping malls, these guys, AGNC, they primarily invest in residential mortgage-backed securities, MBS. And what's really crucial here, this is important, is that these securities, the ones they focus on, are often guaranteed by U.S. government agencies. Think Ginnie Mae, Fannie Mae, Freddie Mac.
Oh, okay.
So that gives AGNC a relatively safe asset base, in terms of credit risk, especially when you think about how volatile the housing market itself can be sometimes.
Right, so it's mortgages, but with that government backstop makes it feel a bit more secure. That sounds like it could be a pretty stable income source for them then.
Precisely. Their whole specialization as an MREIT is kind of geared towards generating income, often resulting in those high dividend yields we'll definitely talk more about. But and this is key, it also means they come with specific sensitivities, especially to things like interest rates and, the overall housing market dynamics.
Okay, that makes sense. The model is built for income, but sensitive to the environment. Let's dig into the financials then, the numbers game. Our sources pointed to some, pretty solid numbers recently. What are we seeing for revenue and income?
Yeah, looking at the trailing 12 months, AGNC brought in approximately $496 million in revenue, and their net income was around $236 million. Now, if you calculate that,
Wow, that's
it translates to a very strong profit margin, about 47.6%, which is frankly quite high for a REIT.
47.6%. That's impressive.
Yeah.
How do they manage such a high margin? Is that typical for REITs?
It's on the high end, definitely reflects their model. It comes back to that net interest spread we touched on. Borrowing short-term, investing in higher-yielding, longer-term MBS, and using leverage to amplify it. When that spread is wide and they manage costs well, the margins can be very good.
Got it. Amplified by leverage. Okay. And what about earnings per share? And how does that feed into its valuation picture?
So the trailing EPS, the earnings over the last year, is around $1.26 per share. But here's where it gets really interesting valuation-wise. The forward PE ratio, looking ahead, stand at just 6.23.
6.23. Compared to what?
Well, compare that to the trailing PE based on that $1.26 EPS, which is way up at 37.31.
Whoa, that's a huge difference.
It is. It suggests that investors and analysts have really optimistic expectations for future earnings growth. Like, significantly optimistic. They're expecting earnings to really pick up.
So the market's basically betting on a big earnings rebound. What about debt and cash flow? Especially for a company using, as you said, quite a bit of leverage.
Right. Leverage is central to their model. While our sources didn't give the exact, up-to-the-minute debt figure, it's common knowledge that MREITs, like AGNC, use substantial leverage to boost returns. It's just how they operate. Their cash flow tends to be pretty steady, though, largely because the income from those government-backed mortgage securities is pretty consistent. And it's the steady cash flow that supports their monthly dividend, which, by the way, is annualized at $1.44 per share right now. That gives it a really high yield, about 14.8%.
Okay, yeah, that 14.8% dividend yield definitely jumps off the page. How does that stack up? And what does it tell us about how the stock's valued right now?
It's exceptionally high. I mean, even among other REITs, which are known for dividends, 14.8% is way up there. It really underlines its focus as an income-generating investment. Now, thinking about valuation, Morningstar, for instance, they rate AGNC as fairly valued around $9.29.
And where's it trading now?
It's actually trading very close to that, right around $9.32 last I checked. So while we don't have like a single precise intrinsic value number from the data we looked at, these relative valuations like Morningstar's fair value plus that huge dividend yield, they suggest the stock is probably priced pretty close to its fair value right now. Not obviously cheap, but maybe not wildly expensive either.
Okay, so fundamentals paint a picture of a high-income stock, fairly valued, with big hopes for future earnings. Let's shift gears a bit. Beyond the fundamentals, what are the technicals telling us? The charts, the price action?
Sure. So the stock's currently hovering around $9.60. That puts it, comfortably within its 52-week range, which has been between $7.85 and $10.85. Now, if we connect this to the bigger picture, its current price is sitting just above both its 50-day simple moving average, which is around $9.23, and its 200-day SMA, which is at $9.53.
Okay, so above both key moving averages, what does that usually indicate?
Generally, that's seen as a sign of moderate bullish momentum. It suggests the recent trend has been positive, pushing it above those medium and longer-term average prices.
Right. And what about the RSI, the Relative Strength Index? Is it showing overbought, oversold, or somewhere in between?
The RSI is sitting around 53 right now.
53. So pretty much neutral territory.
Exactly. It's not screaming overbought, which might signal a pullback is due, nor is it oversold, suggesting a potential bounce. It really indicates pretty balanced momentum at the moment, no extreme readings either way.
And how bumpy is the ride for someone holding this stock? How volatile is it?
It shows moderate volatility. Our sources put its daily volatility around 1.18%, but maybe more telling is its beta, which is 1.27.
Beta of 1.27. Remind us what that means again.
Sure. Beta measures how much a stock tends to move compared to the overall market. A beta of 1 means it moves in line with the market. Greater than 1 means it's more volatile. So a beta of 1.27 tells us AGNC tends to be about 27% more volatile than the broader market. So yes, expect slightly bigger swings up and down compared to, say, an S&P 500 index fund.
Good to know. Managing expectations there. So putting it all together, fundamentals, technicals, what's the overall sentiment around AGNC investment? What are analysts saying? What's the market mood?
Well, the latest earnings came out July 21st, 2025. And importantly, there weren't any negative revisions to price targets from analysts afterwards, which is generally seen as a positive sign. Plus, they declared the regular monthly dividend of 12 cents. That consistency reinforces the positive income sentiment around the stock.
And the analysts themselves. Buy, sell, hold.
The consensus leans towards a sort of moderate buy rating. Looking at recent analyst ratings, out of 15, 9 rated it as either buy or hold. Nobody's screaming sell right now. Their average price target is interesting, though. It's around $9.58.
That's very close to where it's trading now.
Exactly, which suggests maybe analysts don't see a ton of upside from the current price, at least based on current information. Social sentiment is a bit mixed. The fear and greed index is at 39, which indicates some mild fear overall in the market. Yet AGNC itself has shown some bullish price movement lately. So a bit of a mixed signal there.
Okay, moderate buy, but price targets aren't suggesting a huge run-up. So looking ahead, what are the big events or factors that could actually move AGNC's stock? Any specific catalysts coming up?
Well, one very immediate thing is the ex-dividend date, which is July 31st, 2025. This often makes the stock attractive in the very short term for something called dividend capture. Basically, investors buy just before the X date specifically to get that upcoming dividend payment.
Right, buy it, get the dividend, maybe sell it shortly after.
Yeah, though it's important for folks to remember the stock price usually drops by roughly the amount of the dividend on the X date itself. So it's not free money, it's more of a trading strategy.
Good point. And beyond that immediate dividend date, what's bigger picture on the horizon?
The absolute biggest factor, without a doubt, is future interest rate movements by the Federal Reserve.
Ah, yes, the sensitivity issue.
Exactly. Mortgage REITs, like AGNC, are highly sensitive to rate changes. It directly impacts their borrowing costs versus what they earn on their assets, that crucial net interest margin. So any Fed meetings, inflation reports, anything that shifts expectations about rates, that's huge for AGNC. Upcoming earnings reports are always important too, obviously, and any major changes in government housing policy could also play a role. Our sources didn't flag any major company-specific things like big mergers or acquisitions or new product lines for AGNC itself, though.
It really sounds like it's all about the macro environment, especially rates for this one. So let's talk about the flip side then. What are the main risks investors really need to keep front and center with AGNC?
Number one risk, as we've been saying, is interest rate sensitivity. If rates rise quickly or in a way that flattens the yield curve, it can really squeeze their profits. They do use hedges, but they can't eliminate that risk entirely. Then there's just general market volatility. With that beta over 1, it's going to swing more than the market average, so you need the stomach for that.
And what about that huge dividend? Is it totally safe?
That's another key risk, dividend sustainability. That 14.8% yield is obviously very attractive, but it's paid out of earnings. If those earnings falter significantly, perhaps due to those interest rate pressures we talked about, then theoretically the dividend could be at risk of being cut. It's happened before with ERMITs. And finally, even though their assets are mostly government guaranteed against default, a severe economic downturn or major stress in the housing market could still negatively impact the value of their portfolio or cause homeowners to prepay mortgages faster, which also affects their yield.
Makes sense. Lots to watch there. One practical question. Is liquidity a concern? Is it easy to buy or sell this stock?
Oh, not really, no. Our sources show a really high average daily trading volume, something like 16 million shares changing hands each day.
Wow.
Yeah, so that suggests very good liquidity. Entering or exiting a position, even a reasonably large one, typically shouldn't be an issue.
All right, so bringing these all together then, we've looked at the business, the numbers, the charts, sentiment, catalysts, risks. How would you rate AGNC investment overall right now, based on everything we've discussed from our sources?
Okay, pulling it all together, based on the comprehensive data, AGNC investment gets an overall rating of 6.5 out of 10.
6.5 out of 10. What's the reasoning behind that specific score?
Well, the rationale is this. It offers that really compelling, very high dividend yield, which is a huge plus for income investors. It seems to be fairly valued, maybe not a screaming bargain, but reasonably priced according to Morningstar. And that optimistic forward PE does suggest the market expects earnings to grow, which could support the stock price and maybe even the dividend down the line. Plus, the focus on government-guaranteed MBS does add that layer of safety against credit defaults.
Okay, those are the positives. What holds it back from a higher score?
The main things holding it back are, as we've hammered home, that high sensitivity to interest rate risk. That's a big unknown and a major variable. The technicals show moderate bullishness, but it is trading near some resistance levels, and the analyst targets being so close to the current price suggest maybe limited near-term upside potential for capital gains. It feels more like an income play than a growth play right now.
Right, so if someone is considering buying perhaps more for the income, what's a good entry price range based on the analysis?
Our sources suggest that a more prudent entry range might be somewhere between $9 and $9.40.
Okay, so maybe waiting for a slight pullback from the current $9.60 level.
Potentially, yes. Buying in or just below that $9 and $9.40 range could offer a little more margin of safety, cushion you a bit against potential downside, especially given where it's trading relative to fair value and those analyst targets.
And how should different types of investors think about this? What's the recommended horizon or strategy? Short-term versus long-term?
Okay, for short-term traders, there might be a play around that upcoming dividend capture, maybe riding the current moderate bullish momentum a bit further. But they absolutely need to be ready for that volatility we talked about. Quick stop-loss orders would be essential because, news about interest rates could swing this thing pretty fast.
And for the long-term investor, someone looking to hold for income over years?
For long-term investors, I'd say caution is advised, but it can fit. It's definitely suitable for income-focused portfolios because of that high dividend. However, those interest rate risks are not going away, and the long-term sustainability of that dividend is something you must continuously monitor. It really requires a tolerance for those rate fluctuations and understanding how they impact the company's core business. It's not a buy-and-forget income stock.
That's a very important distinction. Any specific thoughts on stop loss or take profit levels for those maybe considering a trade?
Yeah, based on the technicals we looked at, a suggested stop loss could perhaps be placed around $8.80. That's below the 52-week low and some recent support areas, giving it some room but protecting against a bigger breakdown. For taking profit, maybe look at targets in the $10 and $52.85 range. That's up near the 52-week highs, and where some of the higher analyst targets sit, that's likely to face more selling pressure up there.
What's really fascinating here is just how AGNC investment bundles this potential for really high income with these very specific, almost systemic risks tied to interest rates in the wider economy. It's such a clear reminder that even investments that look stable on the surface, maybe because of those government guarantees, still require you to keep a really close eye on the underlying market forces.
Absolutely. It
Right.
really does. And that leads to, I think, an important question for you, the listener, to think about: how do you personally balance that lure, that attraction of a really high dividend yield with the inherent risks that come along with it, especially things like interest rate sensitivity or market swings? How does that fit into your own investment strategy? Definitely something to mull over as you navigate these markets.
Indeed. Well, thank you for joining us for this analysis today. We really hope this has given you a clearer, more complete picture of AGNC investment and helps you make a decision that's right for you. We'll be back soon with another detailed look at a company. Until then, happy investing.